Over the past few days, we've been telling you about all of the reasons why stocks are at new highs. There's the trade truce with China, a neutral Fed, and the belief that global growth is finding its footing. But there are also new questions about whether global growth will soon pick up. Bob Pisani is at the New York Stock Exchange.
It was another quiet run-up to an almost record high, but the Dow and the S&P fell just short right at the close. The bulls have cheered greater clarity on their four biggest fears this year: trade wars, the Federal Reserve, no recession in the U.S. economy, and hopes for a bottoming in global growth. But that last point on global growth is still a little bit on the murky side. We're not quite sure. Shares of FedEx, for example, fell about 10% after the shipping giant delivered a big miss for the second quarter and cut its earnings outlook for 2020, citing higher costs and weaker global economic conditions, and the end of its delivery relationship with Amazon.com. CEO Fred Smith called the global growth story a tale of two economies. We have a stronger consumer economy, that's good news, and a still struggling manufacturing sector. He said growth appears to be bottoming at very low levels in Europe, and that China will likely keep slowing down in the beginning of next year and then see a pickup in the second half. Finally, Bank of America came out with its latest global fund managers survey. That was yesterday, and investor sentiment has turned decidedly more bullish. This is an indication that a lot of traders believe that the global economy is bottoming. Almost 70% of respondents said they're not expecting any recession in 2020. That's up, way up from just a month ago. For a Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.